Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Winter has finally arrived. With it, some cold temperatures. That's having an effect on what we're seeing in these feedlots. We're going to talk about that, how the cattle market is doing when it comes to those weights, but prices midweek. Kind of nice to see some green when it comes to cash movement for our cattle. We'll also talk about some consumer confidence. We know that the Fed's up those interest rates once again. What does that mean for moving these proteins out of our grocery stores and cold storage? Are we going to end up seeing a backup? Lots that we're going to look at today. And as you can see, it's not Brad this week. Joe Kooima joins us. He is with Kooima Varlick out of Sioux Center, Iowa. And let's kind of start out with the fact that you guys have had some serious winter, which is having an effect on the feedlots. And we're seeing that really in all the upper Midwest at this point.
Yes, thanks for having me on in place of Brad here this afternoon. We're seeing some big condition swings over here. We started the week with a lot of moisture, actually seeing half inch to an inch of rain, and that froze and got warm enough and kind of melted off again. Yesterday, I had some more freezing rain that shut down quite a bit of schools and stuff around here and had some ice. And then today we got 2-3 inches with a little bit more to come. And we're on the lower end of stuff here. If you go up north into Minnesota, especially into the Dakotas, especially there, that's where they're really getting whomped at pretty good. So conditions definitely, winter's here. And it's been a few winters since we've had actually a winter season where you can see gains maybe collapse here just a little bit. Otherwise, the cattle have done really well the last couple of years through the winter season, but we're definitely seeing a huge different reaction here today.
But Joe, dropping a little bit of weight right now for the cattle is okay, considering that we've had some heavier cattle.
Yep, they've done it all. Like I said before, they've done it all through the feedlot. And today we get some numbers out. They're always a little bit behind, a few weeks behind. We're down 6 pounds on the all cattle category. We got steers down 2 pounds. We got heifers unchanged, and obviously looking outside our window and talking to our customers that we rely on for information too, I would see that probably to continue a downhill slide with their weights moving forward.
Midweek, we started to see a pickup in purchases, obviously coming out of the South first with some of those cash numbers.
Yep, we got some cash to kind of finally show up today. It did take long enough, put it that way, and I think the market maybe felt a little bit of that, especially with the storm kind of coming through. But we got 155 in the South. It's not a whole glut of cattle that are getting bought that way. The Packers did go into this week expecting the storm to come, and they already had cut back on some of the kill capacity anyway, so it's kind of playing into their hands just to a certain degree. But 155 in the South is fully steady with last week. They did start at 154 last week and ended up Friday at 56. So it's still good. Cash didn't collapse. It's holding there. Up here in the north, there's some 248. Eastern Nebraska, once again, not a true cash market because there's not a whole lot that need to be bought. There's also some 157 to a regional just about an hour and a half ago. And unfortunately, we didn't see the reaction that we wanted to on the futures board today. And I guess we've almost come to realization that we're just going to have these episodes from time to time where the market has a $5 rally, anticipating something like this in the north with weather. And then the market just gives a little bit of it back. And then looking at our screens all day, you're trying to figure out, all right, cash is steady, board's breaking, what am I missing? And then today you just kind of have to go back to outside markets. Dow Jones down 800, 900 for a little while. You got S&Ps down over 100. So there comes some money flow that just comes out of the cattle just because that's the easiest. It's just the uncertainty of everything around us with the economy and inflation and whatnot. That's just the easiest drawback that cattle can have with that situation.
Looking at your neck of the woods, because as I look out my window, obviously we don't have the snow on the ground, and we've seen that cash movement take place. Is there some concerns, especially in the Dakotas, Minnesota, your neck of the woods of Iowa, to get these cattle moved to slaughter?
There has been a little bit of that. So we're in the midst of it. Obviously, there's been roads shut down, interstate systems kind of shut down there temporarily, but it's a temporary thing. I think by the weekend it'll be fine. Everything will be going. Next week looks really cold, but at least it's not freezing rain in some areas. We can move the snow. We can get through it. So I would say that the whole transportation problem is probably today and behind us, and we can move forward from there.
And finally, let's take a look at consumer confidence. On Wednesday, the Fed said that they were going to up the interest rate. Does that cause some concern for you guys and maybe a backlog into cold storage?
Maybe just a little bit. But we're gonna have to talk about that from time to time because it's a reality, and it goes back to the uncertainty and cattle just not doing very well with that. But yeah, looks like interest rates are here to stay. Maybe not moving up in the caliber that it was a year ago, and I do believe that's maybe part of the little break that we had starting yesterday, actually the day before, kind of anticipating they would be higher. But I think it's just a short term little deal here in the futures market. After that rally, really you're looking for a break to maybe own here. So that's how I look at it. Demand to me is still really good. Last week we saw that big drop in boxes kind of out of the blue, and cash actually ended up being better last week compared to the week prior with a drop in boxes that we thought was like, oh no, here we go, it's going to be sloppy. But to me, that answers the question kind of about what demand really means or what it really is.
One final question for you. This is really the last full week of trading as we head into 2 weeks of holiday action. What do you expect as we head towards the new year?
Those are usually kind of fun weeks to kind of anticipate. And I would say that the last 2 weeks with what cash has not really unexpectedly done, but just showing the true power and grit that it had, that the Packers have meat that's sold out in front. They need some meat around them. The retailers want that as well. I think it's a pretty exciting 2 weeks here to kind of finish things out. And you look at a lot of your seasonal plays as well, this December board, this Feb board. Those charts look really good going into these shorter weeks. You got back-to-back week of demand as well. And I think that's something to look forward to here.
Wonderful. Thanks for joining us this week, Joe.
Thank you.
Joining us has been Joe Kooima, and as we always want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.